what are the 2 or 3 emergent trends that you think offer a good potential?
Higher returns, a little bit higher risk. You need both the bond side as well as the equity side to get obviously the potential growth.
But let's zoom out a little bit.
India is a country with a lot of domestic consumption.
How important is it to have exposure to these regions from an asset allocation perspective?
Infrastructure will be one of the big themes as well for 2025 and beyond.
Hello everyone, welcome to the latest episode of Navigate with HSBC. I'm Abhilash Narayan and I'm an investment strategist at the Chief Investment Officer team with HSBC Global Private Banking and Wealth. I have with me today Mr. Willem Sels, who is the Global Chief Investment Officer at HSBC Global Private Banking and Wealth. Welcome, Willem, to the podcast.
Great to be here.
Let's zoom out a little bit. Aside from India, a lot of other emerging market countries within Asia and Middle East are also, benefiting from higher growth, favorable demographics. So when you look at it from a global perspective, how important is it to have exposure to these regions from an asset allocation perspective?
So emerging markets typically give you, from a longer term perspective, higher returns, a little bit higher risk. You need both the bond side as well as the equity side to get obviously the potential growth, which is obviously superior in the emerging markets than in the Western world, and also the income. Currently, the income side is not necessarily all that attractive. I do think that especially in Asian fixed income, the credit spreads, the pickup over Western bonds has decreased, yes. But there are still opportunities there. So for example, we like the Asian financials. We actually like, from a local currency perspective, the Indian bonds together with the Indonesian bonds. From an equity perspective, when you look at Asia, what we really focused on is the domestic consumption. And that again comes back to the tariff question that you were asking before. If exports become a little bit more difficult, you want to focus on domestic consumption. Clearly, India is a country with a lot of domestic consumption. You have other areas, for example, Japan is seeing that acceleration. Singapore is relatively defensive. So we have a mixture in the equity market where we look currently, both the domestically oriented stocks or stocks that give you quite a decent and safe dividend yield.
Thanks, William. And now we've covered, I guess, both equity and bond markets. So let's now shift our focus to the more exciting part of financial markets. Obviously, there's been a lot of hype around, artificial intelligence, the reshaping of supply chains, and, new business models coming to fore. So from your perspective, what are the 2 or 3 emergent trends that you think offer a good potential for investors over the next few years?
So we were talking about these global relationships between countries around the world and that global competition. That is the first trend, I think. The second one is around, all of the innovations that you're mentioning as well. That is the enabler, I think. The third one, to me, is the importance, of energy sufficiency and also, obviously, the energy transformation and the sustainability angle. I think on the first one that a lot of companies will want to compete, especially in the field of manufacturing, and it is quite difficult. Therefore, the economic blocks that have a very sound industrial policy are going to win. I think India has a very clear one, and that is a strong positive. Where I come from in Europe, we don't have it, and you see the impact on manufacturing. That is negative. That manufacturing obviously needs the support from the technology side. And when I think about the innovation around AI in our second trend, I don't just think of chips. I really think about the entire ecosystem around this. And that also, very importantly, impacts the users of AI, whether it is large language models or AI more generally. It really enables innovation in areas like automation, in areas like cybersecurity, even in the healthcare, development of new drugs. You need to test all of those lab results, and clearly AI is helping there as well. So I would encourage people, when they look at AI, to not just think about chips, but really about the whole ecosystem. And that basically gives you much more diversification and obviously cheaper access as well in terms of pricing of the stocks that are there. That is actually also linked to my third trend, because when you do AI, you need more electricity, you need more energy. And I really think that when people think about the energy transition, the electricity sufficiency, the energy independence really coincides with the sustainability transition. And we will need all sources of energy, whether it be oil and gas. Clearly, there is an electrification, so that potentially leads to much more of a need for all of the electricity generation, be it nuclear, be it hydro, be it solar, wind, etc. We need all of those resources. We therefore also need to invest a lot in the grid and therefore in infrastructure. I think infrastructure will be one of the big themes as well for 2025 and beyond.
So the key takeaway for investors is, when thinking about AI, look at the whole ecosystem around it. And, AI will need a lot of electricity to power it. So there are opportunities in electricity generation and the grid infrastructure.
Very much so.
Thank you, Willem, for sharing your valuable insight. I hope our listeners found it to be as engaging as I did. Thank you for tuning in to Navigate with HSBC. If you like the insights, please follow HSBC India across all social media handles and have a great day ahead.